Here we go. Welcome back. Super excited to be here today with Chris James Murphy from KlinkFinance. Finance. And yeah, it's been an interesting couple of weeks. We've just been talking about it pre the show. So, but much ado about nothing. I want to hand it over to Chris James Murphy and sort of maybe share with us sort of your background, how you got into crypto first before we go into what you're working on right now.
Sure. So first of all, Stefan, thank you very much for having me on the show. I was very excited to speak today. So yeah, a little bit about myself. I'll keep it short. If you could guess the accent, I'm Irish. I'm based out of Berlin, Germany. I've been here for a number of years now. I was more of a professional person, I would say, for most of my career. So I kicked off working in big tech. I was with Twitter and LinkedIn for a few years, working on the ad tech side. I helped an Irish company move into the US market in North America. I was in New York for a few years, helped them go to market. Did a stint in financial services in London, found it very boring, so jumped my way back over to Berlin, where I've been in the venture development, venture capital ecosystems for a number of years, validated various different business models, assisted businesses in terms of them moving into new markets as a consultant. But yeah, down the crypto rabbit hole since 2015, right? So as many people came in trying to get rich quick, right? Usually get a little bit burnt, then mature, but it stuck with me. So as time went on and I moved more into the entrepreneurial route, I began to validate and obviously believe more so in the technology as well. I know topics of today, as before we came onto the conversation, we're talking is, what are tokens? Are they securities? Are they commodities, right? But for many people in the space, perhaps listeners as well, right, we all know that it's a form of technology, right? So that really drew me in. And yeah, it's been a ride ever since. So I founded Klink with my co-founder Philip at the very end of 2021. So we met just after Christmas. We were introduced to each other through the Berlin Venture Network. Started validating the business model, obviously understanding is there positioning in the market, observing different filters, testing, etc. And then we're lucky enough, even in the height of a bear cycle, to raise our first round of investment and register the company in the second half of 2022. So yeah, recently launched and in that product market fit phase, which is, of course, as you probably know, Stefan, a minefield to navigate, but enjoying the whole process of it.
The journey. Yeah, no, super interesting. It's like, and always great, and that's why I really put the show together, really to find builders that are creating, right? And I was actually just in Berlin, right? Just about a month, maybe 2 months ago now. I mean, time flies in crypto, but we had a really great meetup, and there are a lot of different types of crypto companies, regulated, but also DeFi companies and DeFi protocols, right? And how do you find the community, and what brought you to Berlin? Why do you, as an Irish individual, from Dublin, sort of a whereabouts in Ireland, moved to New York, to London? You've been a citizen of the world, and why Berlin?
Yeah, it's a good question. I think like when everyone wakes up, sometimes they ask themselves why, why they're living in any location, right? Yeah. I was drawn here due to the innovation piece, right? So of course, big cities get their time in the sun, especially London for financial services and fintech companies. But there's quite a space here just generally in innovation. It's a cost-efficient city. There's great access to capital. There's great access to talent. And just generally a good place to live and enjoy life. So, personal and professional reasons, of course, is what will bring you anywhere. But in terms of the community of Berlin, I think you really hit on a good point, right? So Germany is this weird complex whereby, after a year of holding crypto assets, at this point in time, it's not taxable anymore. And I believe that was brought in due to the regulators or the financial intermediaries of Germany not wanting people to speculate on tokens, right? So that was initially an innovative piece where it actually incentivizes users to hold assets, which I'm sure we can jump into later in the call, is what our business Klink is all about. It's getting people to hold and earn over time. But then there's the other side of it where there's, if you don't know, a huge bureaucratic nightmare in terms of registering businesses, bureaucracy with governments getting set up. I've had friends that have taken about 6 to 8 months to actually register a company here. So it's quite a void. And generally, I would say in terms of the innovation path, you probably have heard that the MiCA's legislation is coming through in Europe. That's the Management of Crypto Assets Framework. I know there has been a lot of German legislators that have led on those articles, which is great. But generally, it's not a forward-thinking place for crypto as a whole, I would say, apart from these anomalies. What I would say is there's very much a DeFi community, though, right? So I always like to bracket things into two segments. There's the regulated partners, institutions, etc., the guys that are, I guess, with the bunny ears playing by the rules, right? And then you have the decentralized communities where the legislative isn't really touching at this moment in time. Even with the MiCA's framework, I know DeFi is not really... It doesn't really touch on the legal implications of decentralized finance. So a lot of DAOs, some big players coming out of Berlin for sure, but I wouldn't put it as the HQ of crypto in Europe at this point, right? But it's still forthcoming.
But I think the really interesting thing is there are 2 or 3 interesting elements that I walked away with from Berlin. One is you have this sort of rebellious nature in Berlin, right? I mean, there is this sort of, we can stand up and be this island in the middle and surrounded by, at the time, these different empires, and they were sort of in the middle of Eastern Germany or the communist bloc whilst they were a Western sort of nation. Number one. Number two was I think you brought it up, right? The cost base. It's actually very costly, in terms of good value. In terms of living, cost of living, space, rent, etc., in Berlin. And then, sort of, I think the other element to me, which I want to go in on and how Klink plays with this, which is really in Germany, if you hold your crypto for more than a year, it is not subject to tax, right? There's no income tax there's no capital gains tax, if I'm right on that, right?
Yeah. Correct.
And so how does KlinkFinance play into that, right? That's a hugely beneficial element. And wouldn't I just sort of, could KlinkFinance actually be the safety deposit box or equivalent on the blockchain?
Realistically, I would say no. Like many other crypto services you use, we are just one of them to German consumers. It's not on the company for them to portray or ensure to some extent that the users are ensuring that they're paying their income, their taxes at the end of the year. But I think it's a great prerequisite by a government level to incentivize holding, right? So you see these many different, you would have seen the Coinbase video that came out, right? That the laws on if a token is a security was made in like 1940 something, right? But you do see regulators in Europe saying, okay, we accept these assets, whether they're dubbed or what legal framework will come after them, they're still being defined as an asset class over here that people should be holding and not speculating in. So I think that was a good prerequisite. Yep. But yeah, I think basically we can't have an impact on people from holding, of course, that's upon the consumer. But I think other countries should definitely follow suit on incentivizing such behaviors that it at least inhibits that kind of more risky short-term speculative behavior.
Yeah, I mean, I think, and you try to do that, right? I mean, you try to form a sort of gamify the whole asset management element associated with hodling, right? And holding the coins. I think you've got an interesting set of backers, right? I mean, you've got a couple of banks that have actually entered into working with you. I think Signum Bank's an investor. You got UOB as ventures, sort of a big Singaporean bank as an investor. So how does that work with sort of, where you're trying to go, the sort of traditional banking world, and you're sort of maybe a bit of a hybrid in that world on helping them on that journey. Is that right? Or how would you explain that?
Yeah, so let me just, for the listeners, right, that are in, just quickly, we are a gamified crypto asset platform. Basically, if I was to give us a summary in one sentence, it would be that we incentivize savings behavior in crypto through gamification. So the mechanism is known as prize linked savings. Quick history lesson, PrizeLink Savings is one of the most popular savings schemes in traditional banking. It has over 25 million participants in the UK, very popular in secondary jurisdictions, India, Pakistan, Australia, Canada. Basically, it's an incentive where you win interest for holding assets over time as opposed to earning it on a nominal fixed interest rate. So our personal belief, and I had hit on this at the very beginning when we validated Klink, was that we think that by mirroring traditional type services and bringing them into Web3 or at least to the crypto world, right, is that you're going to see the same kind of consumer psychology behaviors that will incentivize good, rewarding behaviors to the consumer over time. So we were very inspired by this saving scheme. And in a question, just kind of related to your question, is, where do we actually position ourselves in all of this? Are we for the complete crypto degens, right, who are in non-custodial world, who are hiding their private keys on a secret island, right, with the tinfoil hats on, or are we for the moms and uncles or dads that aren't in crypto yet? Because the space is so early, solutions have to be very led towards different kind of consumer groups, right? In terms of how is the platform, how easy is it to use, to navigate, and on what level are you actually engaging with your consumer in the way in which they manage their assets. So we've landed on that. We want to take on the wider consumer market, which is what we would describe as the Web 2.5 community. How do we target that Web 2.5 community? It's by playing by the rules. We're a licensed institution. We recently acquired a virtual asset service provider license in Europe. We KYC, AML consumers. We have a huge amount of insurances in managing the assets. We use Fireblocks technology that has over $30 million of insurance in the case of breach, secondary kinds of insurances. In terms of the user experience flow as well, we would be like I don't like to describe it this way, but it's probably better just for a level of understanding. The user experience is almost like a neobank. It's like a Revolut. It's a very simple setup. People are quite used to it. It's available on iOS and Android, etc. And just generally giving people a good ease of access to earning wealth in an exciting, safe form over time. So in regards to the cap table, why I'm going on this big spiel is working with these larger banks. They also see this, right? It's are we serving crypto degens, right? So crypto degens, people who are completely crypto to native. Are we launching a token ourselves as a fund in terms of investment? We didn't really feel it was apparent to go down that route, right? It's not imperative that we have a token as a platform. We've seen bigger players in the market, right, that had their token that went under, and it led to a lot of issues over the last year. We won't name names, right? But in terms of accessing, we've taken equity investments. So that's just middle of the standard. You as a Web 1 company, Web 2 company, you get investment through cash capital, and they're investors on our cap table. So no token at this point in time. And that has landed very well with that type of investor, right? So the banks that you'd mentioned, UOB, they're very good investors to us as well. We have some other institutions out of the US that have come onto our cap table. We'll announce them over the coming weeks and months. But they really see that this next market cycle will be taking on that kind of user, right? It's like they've heard of crypto, they've heard of 2 cycles now, but there's still a mass array of people across all markets, Western markets, emerging markets, that need that level of accessibility that we feel isn't really there as a platform or service at this point in time.
Yeah, no, I mean, I think, there are a couple of interesting things, right? I mean, I think, I look, and how does this play out, right? I mean, so there's a big business in network security in terms of blockchain security. And so in a proof of stake network, you can actually earn significant yield on the coins that you love, right? So you earn the rewards in the coins that you love by staking those coins in a validator node. In the case of, let's say, Atom or the Cosmos ecosystem, you can earn up to 22% on that. How does that work with, ultimately you need to have your own keys. You need to have all those elements. So it's not the easiest interface and interaction with that service. However, you still earn significant rewards. You have the risk of volatility. How does that work with KlinkFinance, and how is that different to KlinkFinance, or how is KlinkFinance different to that?
Yeah. So first of all, I always say in every conversation I have, investor, user, or podcast, is that you should diversify, right? So
Yeah.
I would like a perfect world where someone is taking on their own validators, right? They do
Yeah.
have their own level of education at some point. But if you don't have that, or even if you do have it, there should be a presence of distribution of some of your assets towards services like prize link savings. And I'll tell you why. So basically, through our services, I described the value proposition in two ways in terms of returns. Number one is that it's still a pretty good place to earn a variable amount of interest. If you stick with the platform over time, you're still earning on top of your assets, right? So it's a no-brainer. It's still an investment product, and it's still a good place to hold your funds. But on the upside, the way in which we present the model is we aggregate all the funds together of the users, and they at an institutional level will go to those validators. So it's a single source of a larger amount of liquidity that's insured. There's institutional levels amount of technology that's staking on those validators. And what we do as a business is we distribute those that yield generated collectively to the user populations, but back at random. So what does that mean? It's the variable interest I've mentioned, but you also have the upside to earn the total yield pool by games of chance through our services. So at the moment, our top prize is kicking off is at $250,000 that you can earn every day in every token. We want to build that up as we develop as a business up to $1 million daily. So simply for holding funds with us, it's safe, it's insured, it has the best forms of technology. You still earn the yield without the complexities and obviously the risk, but you also have the opportunity to earn on the upside in ways that you would never earn on a fixed term interest rate either. So again, around diversification, you should diversify some of your funds towards pricing savings services. For the basis of that, you can earn on the upside more than you could ever earn in terms of active trading, taking risk, or else waiting for your funds to compound over time, which will still improbably earn the rates that would be available if you earn through our services.
Interesting. Yeah. I mean, I think, that's, and given that, right? And how do you feel about all this, do you feel you need license? I know you are, or you have applied for certain regulations. How do you feel about navigating that world specifically? I'm sure a lot of the investors are asking you about that and offering. Yeah.
Yeah. I think no matter where you stand as a founder in the crypto space, you will feel the touch of regulation at some point in the coming years. So it's a question of, how do you actually interpret it? What is your long-term strategy in this? From the earlier stages I've mentioned, and deciding on that consumer demographic that we really want to target, not now and into the future, is to gain accessibility to them. We don't feel there's any way in which we can't be fully licensed institution, play by the rules, ensure that we're operating in the ever-changing goalposts of the lawmakers, right, which we're seeing, especially over the last few days. But we side on the side of regulation. We want to have clear-cut rules that we can abide by. And Europe has been very good in this. Of course, the Goliaths are going at it now in the US market, but subsequently there will be answers there for people of our side, and hopefully in the coming months and years, especially with the US market, whereby there's a clear rule book whereby we can operate and freely grow our services and user base. The trade-offs each, just before I finish this, because we have our first licensing, it already has given us an access to take on this crypto curious consumer. If you know much about the marketing space, I'm sure, of course you do, Stefan, but for listeners, right, crypto marketing is quite a complex process, right, because you don't have the traditional access to channels. It's very much a growth hacking methodology, which is fun, but sometimes it can be tough to be scalable. So in terms of accessing these MiCA licenses that are forthcoming, and even in terms of the licensing we've had already, we've already been given access to major social media platforms to be able to performance market. That again gives us access to that Web 2.5 consumer where they're typically hanging out online, right? So in terms of accessibility, in terms of proof of the model and that consumer base we're going after, we personally believe that being licensed, operating efficiently, etc., will give us that access and scalability to our services.
Interesting. Yeah, because one of the things is in DeFi, we've always prided ourselves on by never taking custody of user funds I thereby am, not subject to your keys, your coins. You're looking after it. You're deciding to deposit it into your own safety deposit box, which is actually the blockchain. And that's maintained by multiple different node operators all around the world. So it's decentralized by nature, right? So as a result, I have no influence over your coins. I have no responsibility. The custody is with you. It's self-custodial. In your case, are you taking on custody of the funds? You mentioned Fireblocks. You mentioned, so does that mean KlinkFinance is working with Fireblocks to take on custody of the user funds?
Certainly, yeah. So ultimately, Fireblocks is a CeFi platform. So whereby the funds are aggregated. Users have a address that they can send and withdraw from, but it acts like a centralized entity. What we do is we aggregate into, if you could imagine, a single pool. So you'd have the Bitcoin pool, the Polygon pool, and there's an autonomous form, as I'd mentioned, that goes into the proof of stake validators where it's necessary. So as automated as possible. But yeah, at this point, we're not a self-custodial solution. Yeah. Why you ask that is probably a very fair question in terms of the way in which the market has moved, right? I observed, as I said, a crypto native for many years now, many of my friends, my uncles, my aunties, they are holding in Revolut, they're holding in Binance, etc. But if you ask them of their private keys and their seed phrase, they will get there. They will get there, right? And I'm not saying that. Of course, you can say we're the bad guys of crypto because we're not going completely non-custodial DeFi initially. But again, completely aligning and serving that consumer demographic, that crypto curious consumer, we believe that this is the right way to approach this, right? In terms of the active management, it allows us to have the insurances. So as I mentioned, over $30 million of insurance in the case of breach of assets. You're able to recover assets if people have lost their passwords, etc. And it's a good stepping stone in terms of the demographic of users that we feel we're serving initially. What I would say is that in terms of the model and the gamification, there is a layer of capability for us that we will obviously launch a non-custodial form of our services eventually. It's not too complex of a process, actually. It's just a form of basically that automation form that I've mentioned of those pools, those aggregate pools that get swept into validators. We could simply form smart contracts that allow people to add their non-custodial wallets. And there we have a layer of non-custodial nature to our services. So that again, as an early stage business, so we've raised some funds. There's a serious amount of onus upon the foundational team and technology is that it's absolutely squeaky clean to kick off with, right? That there's no bugs, the smart contract hacks, etc. We also felt that in the very earlier stages of our business, as we still very transparently want to validate this business model, right? To understand that the consumer action is there and that we're accessing people, is that it would be better to take the safer institutional approach of at least custody with technology that it could be way superior than what we can build with our limited resources, prove our model, raise further capital, and then build our way into being of a more non-custodial solution. So it was more of a strategy decision, I would say, as opposed to an end result.
So it's really time to market, right? So how can you get to market faster and provide a good user experience on the front end as the market and technology evolves to enable more decentralization associated with that? One of the other things is on your website, you sort of talk about sort of a prize, right? And you've modeled it. I mean, you mentioned it really early on, right, in this conversation that you offer prizes for depositors, right? And I think you have like $100,000 every day that you make available. Yeah. How do you fund that $100,000? Where does that come from, right? I mean, that's going to be a big question that people will ask.
It's asked of every conversation I'm ever in, Stefan, of course. It's a question of 2023 and 22, and it's a fair question, right? So I split it into two. So there's two main forms of holding assets that we have on the platform. At this point in time, as I said, we recently just launched in beta. We're only managing stables at the moment. So USDC, DAI, USDT. So as many listeners probably know, pegged to the US dollar. Yep. For the most part, right? USDC had a bit of a spook earlier in the year, right? But nonetheless, still treasury backed USDC. So what we do at this point in time is in that autonomous form, the USDC goes into a single pool in Fireblocks. And then our technology in the back end, there's a lot of automation capable in Fireblocks. It's a very sophisticated platform whereby we would actually redistribute it into tokenized treasury bills. So writing on the wall, right? What you probably would have seen is there's some pretty good innovation around being able to mint tokens that are completely one-to-one backed with US Treasury bills. They're earning around 5% yield at this point in time, short-term treasuries. That's the flow of assets through the stables. In a short form, that's how we earn the yield. As a business model perspective, I'm very happy to present is that we take a nominal spread of what we earn in total through the yield, and then we distribute the majority back to our users in the form of prizes. So as I'd mentioned, the probability of our services basically works through sweepstakes model. It's a no-loss lottery. For every $25 you hold in tokens, you're given a recurring ticket. Yep. That ticket actually partakes in a decentralized prize draw. So we are running, and I actually think you'd mentioned to me prior, use Chainlink for your own Oracle, right? Yep. In terms of Truflation, we're using Chainlink for your F. That proves the transparency of the prize draw, and from there basically our platform will distribute the yield that we've earned collectively back to the users based on the game of chance that they've earned on top. So variable interest. What we're building, and I think you probably think is pretty cool, Stefan, is we wanted to create a form of DeFi insurance that was known as prize indemnity. So prize indemnity insurance is like, you might have seen it back in the day, right? Where it's like hole-in-one insurance or a jackpot insurance, right? But basically it's a risk insurance in the case that someone wins a top prize or wins something that is not regularly happening. So we're just about to announce that our top prize insurance will be covered through DeFi. It's the first time prize indemnity insurance has actually been created in the DeFi space through association. It's been a dual build. The way in which it works basically is the Chainlink fee. What we do is we will create tickets for the users based on how much their balance is prior to a draw happening every 24 hours. So our draws will run daily. We upload an IPFS file onto our own smart contract. We then run Chainlink. Chainlink pulls out the 7 random numbers in the draw. If the 7 numbers match one of the user's numbers, the DeFi insurance will automatically pay out on that token on that prize per day. So the top prize isn't guaranteed. I think that's important to note. There can be some point of confusion on that. We don't give 100,000 away a day. Unfortunately, not yet. We would love to if we had enough liquidity, but perhaps we even can at some point. So the prizing savings scheme in the UK has over 100 billion in assets under management. That carves out millionaires every couple of weeks, right? Which we think would be a very cool event if our AUM could get high. But yeah, at this point, the variable rates on the lower, small recurring prizes that you'll win on a day-to-day basis through chance. But we also give the users the upside to win. Some would deem life-changing results with 250,000 top prize. That's what we're starting with the DeFi insurance partner. We want to bring that up to $1 million daily at some point in time later in our business.
Nice.
I would be bullish as a founder and say that perhaps even our top prize DeFi insurance could be 10 million. It could be 50 million if we became a big business. And then we're competing against the global lottery market, right? So the Powerball, people just blow money. I don't need to tell anyone it's the worst bet you'll ever take, right? To play Powerball or lottery. So why couldn't you incentivize this level of savings scheme, but also having the potential upside to earn life-changing results just for taking good long-term holding assets? So that's really the arena that we play in at this point.
No, super, super interesting. And I think, one of the things that, you look at these fintech or neobanks, as they call them, right? You look at their customer acquisition strategy and the amount when money was at least cheap, they were spending anywhere between $200 to $500 in customer acquisition costs, right? And that was going to billboards, Google ads, tech companies, Facebook ads, whatever it was going to the advertisers, right? And I think what you're doing is trying to flip that around and say, hey, rather than give that to advertising platforms or other mediums, why don't we give it to the users? Why don't you get it directly, right? Here's a pool. Anybody that participates and hodls more than $25, you get then to participate in a sweepstake or a jackpot, right? Or a lottery ticket. And so I think that's definitely a much more rewarding element. And again, the users get to participate in something where, they generally don't do, and they just get lured into something. And this way they actually see an upside associated with it.
In validation of neobanks, I think if we look at so it's Web3 space, now it's AI space, right, where the hype was, as I'm sure you know, Stefan, right, a few years ago it was fintech, right? There are multipliers of valuation, 10, 50, 100x of their revenue. But neobanks are actually notoriously hard to make revenue off, right? So in terms of the consistency of the user and the lifetime values, right, a lot of the way in which neobanks will earn revenue is through transactions, right? It's through interchange fees, it's through debit and loans. Loans are actually a complex service to roll out as well. So predominantly, if you look at a Joe Soap neobank startup, a lot of them are relying on the interchange and transactional fees of a consumer. So again, taking a step back, our whole presence is getting people to hold assets over time. And some of the other providers out there that present themselves as neobank savings apps, they're still incentivizing debit and credit card transactions, gamification and taps, etc., that operate in our space. We really feel that we've taken the best out of all models. Obviously, being able to link liquidity into the blockchain economy, there's a huge interest in yield-bearing opportunity that is not existing in traditional finance as it stands as well. So, yeah, it's an
I love the fact when the banks advertise, 0.5% interest, save your money. And it's like, dude, inflation's like 12%. What am I going to do with 0.5% interest on savings?
I to be honest, I do most of my holdings is in Revolut now. I have Revolut Pro. I moved over like 6 or 9 months ago. It's very good for analytics and stuff and just actually tracking your spending. So in a high interest rate environment, right, the treasuries are doing really well, right? My Bank of Ireland, prior, this traditional bank, charges me for my holdings, right? So it's like I actually have to pay for a savings account, right? And it's like you're managing the funds. You know, you have to be earning off them. I don't know the insights out of it. I won't say I do, right? But, you know, in the macro environment, all banks, they have to, in terms of if they do hold liquidity, they're earning at this point a couple of percent in it. So why should I, as a retail consumer, be charged for this at this point in time? I just think it's ridiculous. In the traditional form, the neobanks are kind of stuck between a rock and a hard place because a lot of them are actually built on APIs, right? So it's like a banking as a service provider or an institutional provider. For neobanks, if they don't have an e-money license, they're typically just a front end towards a banking as a service provider where they make money on interchange fees. But if you're a traditional bank and you have the banking licenses, you're earning yields off the liquidity that the consumers hold. So I think it's a sin at this point that they still charge for it, right? So again, bringing a crypto curious consumer in, getting them to hold crypto assets, getting used to digital assets, they should earn and yield the rewards from it in a safe manner.
Yeah. Yeah, no, and I think to all those points, right? I mean, I guess the large portion of the financial services industry are still, you know, they have a large cost basis, right? Which the advantage of having a digital or internet only bank is far more attractive, right? I don't need branches everywhere. I don't need, you know, I can put it all online. I can source it into cheaper locations for having offices, etc. And so, it's definitely a way. And you know, I remember when Revolut first got into, you know, I just set up, by the way, I just set up a bank account here in Switzerland because you can. It's actually, once you live here, it's like super easy to set up a bank account because they all give you one pretty much vanilla, right? However, they charge you for a bank account. So I have to pay to deposit my money with you. And it's, I mean, to me, it baffles me. It's like, I'm going to give you my money. You're living on fractional reserve banking. So every $100 I give you, you keep 25 cents or whatever it is. And the remainder of the 75 cents, you're going and deploying and trying to earn money off the back of it. I mean, likely maybe in US, you know, T-bills or something like that, it's earning now 5%, right? But how many T-bills are you sitting on that are earning 0%? I don't know. But anyway, it's like, so
the Credit Suisse thing, right? So they were completely fractional. Oh, yeah.
But I mean, let's not kid ourselves, right? I mean, every bank in the fiat world is on fractional reserve banking, right? And I think every bank which would, if they and should they have a run on the bank where everybody wants to withdraw their funds, would struggle with keeping that liquidity, especially now where liquidity has really been sucked out of the market. And with the debt ceiling going up even more liquidity is going to be taken out of the market, right?
Yeah, I think it's so interesting, right? Is that of course, it's settled a little bit, right? But earlier in the year, there was the banking crisis. Is that these decision makers, big people in the industry, the Federal Reserve, central banks, they're saying banking is built on trust, right? So I saw this number of times where there's like these proper industry leaders, and they're saying it's built on trust. And it's like, that is the flimsiest thing I've heard, right? Like, you're macro institutions managing trillions of dollars, right? It cannot work off that system still. So I don't know. It's what I find most interesting is how quickly it shifted, right? So monetary policy changed, the rates went up, and what are we, nearly 14, 16 months into that change before transitory vocabulary came out, right? And the global monetary world just turns upside down, right? So the shift, the speed of shift is just what astounds me the most.
And I think largely it's also, anyway, that's the reason why we set up Truflation. I just didn't believe the fact that it was, that it's transitory. I mean, come on, you've printed more money in the last 10 years than you did over the last century combined, right? So you can't tell me it's transitory, especially at the same time you're shutting down the economy. It's like, I just couldn't believe that.
Yeah, so as I'd said prior to coming on to the conversation, I really enjoyed the interview I had in CNBC. But, do you hear usherings of institutions going by your data, Truflation, over government data at this point? So, what are the knock-on effects from a private level where your services are being used for better decision-making at this point?
Yeah, we're a year old, right? So we're still a year and a half old, I'd say, so we're still pretty young. We've been developing this now, I'd say been working on this for about 2 years. We are seeing the adoption of institutions, traditional finance industry, asset managers, using our data, stress testing it, and then verifying the methodology, and very much liking the methodology. And so for us, that's a strong verification of what we have is something of value to the industry. Whilst on the one hand, a lot of them are just using it to be able to better predict the outcome of what the BLS, the Bureau of Labour and Statistics, or the UK OHP are going to announce. That's one angle that they go on. But we're trying to use active data, real time. We're not relying on stale data. We're not a month behind, and we don't do any revisions because we write our numbers to the blockchain. So we can't go and revise 6-month-old numbers anymore and say, oh, inflation back then was much higher than we said it was because we had these new inputs that we didn't have at that point in time. And I think that's sort of an angle that's really appreciated by the industry. And so, over time, we want to be, we've given ourselves 5 years to build this out as a non-biased, independent source of truth that is verifiable, right? So we're on that trajectory to get there.
Well, I think what's most interesting is just the flow of information, real-time data, right? So it's like a coil, I feel, in terms of most financial data that, at the end of the day, there is insights. There's look at the announcement of the suing of both Binance and Coinbase. They did it over 2 days. So it's like, all right, we'll release Binance to the public news first, and then we'll do Coinbase. And I feel through government data, all inflation data, you name it, right? There's always a structure of information that is just not really accessible amongst the hands of the many, right? So services like yours will give only real, true data to information at any point, at any time. So it's I have to say I'd come across Truflation before we had set this interview up. So I was very much excited to speak with you on it today.
Yeah, no, thanks. We enjoy. I think the team is really excited by the fact that there are daily 3,000 unique visitors coming to the Truflation.com website and looking at our data. And we've launched a calculator. So what we'd love to do is maybe with KlinkFinance, or once you launch a credit card, we're integrating credit card data and merchant information so that where people and we're rewarding the individual. So unlike, we don't have quite a lottery ticket yet, we haven't gamified that properly. But what we're doing is rewarding users for sharing or connecting their credit card information with our platform. We will be launching that in the not too distant future. But yeah, then that ultimately creates more independent source of spending as well that is verifiable, right? And so how do we build that out?
Mm-hmm. There's a whole like secondary model of that in terms of consumer spending habit, right? So I mean that can be refed into retailers, etc. Again, right? It's almost like the CBDC things, right? Where it's like, okay, we could say in the west part of England, toilet paper is 10% more used than whatever, right? So it's like this layer of information and data. I think it'd be very interesting how that comes to market over the coming years. But yeah, I think your alternative approach as opposed to the CBDCs is probably more honest to the consumer.
Yeah, I think that's sort of where we're trying to go. And what we're seeing is the consumer is looking for alternative products. And if you can provide a good usability, different insights, they're looking for other avenues, sources of trust, entities that they can work with, right? And so the biggest thing is securing trust. And I think you've done with the $30 million insurance, right? We are insured up to $30 million. And so things like that really help get adoption and on-ramp new users into this space, right? Because they're looking for new, fresh, especially the new generation.
Yeah, I agree with that. And I think there's a two use case point in this, right? So there's pre-trust levels of capability, right? So the $30 million is an initiative to say, okay, I'm willing to give this a chance, right? But even in terms of our consumer behavior, what we see is typically people would actually deposit maybe $100 with us. They'll use us for 2 or 3 weeks. Maybe 4 or 5 occasions, then we've had users deposit maybe $5,000 to $10,000 after that, right? So it's really interesting from a founder perspective, whereas you have this like prerequisite trust information, right? Where it's like, okay, what is the value proposition I can bring to you if I met you on the street, if I've never met you before? But then I believe actually trust and usage of services, if you really bring quality to the actual proposition and the product that someone's using, that's where you'll actually get the real level of loyalty from the people that you're actually trying to serve as well. So it's a complex in itself.
Yeah, and what you're doing is ultimately that's the market pattern, right? A lot of people, they'll deposit a little amount of money, test it out, verify it. How is it? Is it easy to use? And then they'll come back. Maybe they'll withdraw money again first, right? So they'll know how easy is it to take my money out? Can I get my money out? If it's easy to get it out, I'll put it back in. And then they'll come in with more, right? And so that's definitely a pattern. So for, that we've observed, and I think you just attested to that earlier.
Yeah.
So
yeah, for sure.
Yeah. No, really good. Look, Chris, really thanks for your time and the insights and really nice meeting you and sharing and learning more about Klink Finance and what you're trying to do. Go to KlinkFinance.com, KLINK finance.com. Check it out. Do you have an app? Is there somewhere where people should go to follow you or your Klink Finance Twitter, or how do you communicate and how do you want people to sort of follow with you?
Sure. So, KlinkFinance.com, as we've mentioned, we're available on iOS and Android. You get 10 free tickets on USDC tickets as you sign up. You can follow me on Chris James on Twitter. I'm regularly tweeting and being reshared on our Twitter page, right? So you should be able to find me. I prefer if you follow our business, right, and see the progression as we develop. But Stefan, really enjoyed speaking with you today. I'm sure we can run it back in 6 or 12 months to see how both companies are doing, right? And looking forward to speaking again at some point.
Yeah, look forward to that. Thank you. And everybody tune in, follow, and we'll be back soon with some more interesting individuals and entrepreneurs building, creating. And by the way, do you need any new jobs or do you have any opening positions? Maybe people should apply, Solidity developers that you might need or marketing growth hackers.
We're very lucky actually to have a full team of 10 now at this cycle of our business. So after this post product market fit phase, we will be looking for engineers. We have on our website careers page. You can obviously drop us a note on Twitter as well. So and of course our Discord, whatever channel is easiest.
Great. Thank you, Chris, and see you. And we'll be looking forward to see the progress of Klink Finance. Thanks a lot.
Cheers.
Bye.